Everyone is panic selling because Ethereum just dipped nearly 30%. The sentiment is in the gutter, and retail investors are fleeing. But while you are staring at red candles, one of the largest public companies in the world just quietly bought another 100,000 Ethereum. They did not sell, they doubled down. We are standing on the edge of the Fusaka upgrade, the most critical fundamental shift in Ethereum's history, and the charts are printing a technical setup that we haven't seen since the pre-bull run of 2024. If you are waiting for lower prices, you might be making the most expensive mistake of this cycle. Let's look at the data. Right now, Ethereum is trading between $2,800 and $3,000. It feels heavy. It feels slow. I get it. We have been chopping around, and the market sentiment is practically calling for the death of the asset. But we need to zoom out to the weekly time frame to see reality. We are currently fighting to break out of this descending resistance, coming down from the $4,900 highs. But look at the bigger picture. We have this orange dotted ascending trend line connecting our major tops from last year. This line isn't just resistance. It's a roadmap showing us the bullish trajectory and exactly where the price is trying to go next. Most people look at this and see a crash. I look at this and see a spring being coiled. But before we get into the exact price targets and the indicators that are flashing buy signals, you need to understand why this specific moment in December 2025 is different from every other dip we have bought this year. It has everything to do with what goes live tomorrow. Tomorrow, December 3rd, at 21:49 UTC, the Fusaka upgrade goes live on mainnet. Now, I know upgrades can sometimes be sell the news events, but you need to look at what is under the hood here. This isn't just about slightly lower fees. This is the removal of the single biggest friction point in crypto. Fusaka introduces native support for passkeys and pre-confirmations. This means no more seed phrases for new users. It means creating a wallet takes 5 seconds using Face ID, just like a banking app. It means transactions go from taking 30 seconds to being basically instant. Think about that. The biggest wall between normal people and crypto, it is too hard to use, disappears tomorrow. This is exactly what the smart money is positioning for. Look at BitMine. Their treasury slid from $14 billion down to under $10 billion during this correction. Did they panic? No. They treated this drawdown as pure accumulation. They now hold 3% of all Ethereum in circulation and are openly chasing 5%. They are positioning for the Fed pivot and the Fusaka upgrade simultaneously. And the network usage backs this up. November just set a new all-time high with over 619 million transactions across L2 networks. There is no competition here. Only growth. The fundamentals are screaming that the network is healthier than ever, even if the price hasn't caught up yet.
Now, let's strip away the news and let the chart speak for itself. We are looking at the weekly time frame because that is where the signal is. Everything else is just noise. First, look at our Fibonacci retracement levels, anchored from the December 2024 high of $4,100 down to the April lows. We are currently finding support right at the 0.5 level, which is around $2,740. This is the line in the sand. As long as we hold this zone, this remains a bullish retracement. You can see we are also fighting to stay above the 200 simple moving average, that green line snaking upwards. In a macro bull trend, the 200 simple moving average is usually the ultimate buy the dip opportunity. We are also seeing the 55 exponential moving average, the purple line, acting as dynamic support. But here is the indicator that actually caught my attention. Look at the Heikinashi RSI at the bottom of the chart. Every time we have seen this oscillator hit these oversold levels, look at September 2023, look at September 2024. It marked the absolute bottom before a massive expansion. We are printing that same reversal signal right now. If we look at the volume profile on the left, our point of control, the price level with the most traded volume, is sitting right around $2,500. That acts as a magnet. If we do see a wick down, that is where I expect the strongest bid support to step in, right around that 382 Fibonacci level. We have seen this play out before. Remember the Pectra upgrade in May? Price chopped, people got bored, and then the real run started immediately after. The market structure leading into Fusaka looks almost identical. So, how am I trading this? I'm not guessing, I'm playing the probabilities. My load zone is strictly between $2,400 and $3,200. I am dollar cost averaging heavily in this range. As long as we are inside this green box, I view this as an accumulation phase, not a crash. However, we must have an invalidation point. If we get a weekly candle close below $2,150, that is this red dashed line here, then this specific bullish setup is invalidated for me. That would break the higher low structure dating back to 2023. If that happens, I am out of my short-term positions, and I will look to reaccumulate significantly lower, perhaps around 1,500. But if the pattern holds, here is my upside plan. I'm looking for a breakout above this orange descending trend line. Once we clear that, my first take profit target is $3,500. From there, I'm looking at $4,100 to challenge the previous highs. But the real extension targets, based on the 1618 Fibonacci extension, take us much higher. My primary macro target for this cycle remains $5,700. If we see a full-blown mania phase post-Fusaka, the math points to $8,500 and potentially even $11,000 at the 3618 extension. I plan to trim my position aggressively at the third and fourth targets. Now, catching these moves requires you to be comfortable with DeFi protocols, staking, and managing your own keys, especially with the changes coming. If you want the complete breakdown of how I navigate these ecosystems, yield farming, staking, and keeping assets safe, I have compiled all these tactics in my DeFi guide. It is available in the pinned comment and costs only $4.99. It's the exact playbook I use. Here is the bottom line. The risk-to-reward ratio here is heavily skewed to the upside. We have Ethereum mainnet usage hitting fresh all-time highs in throughput, up 57% year over year. The economic load on the network is increasing, which means more Ethereum is being burned, making the money harder. The downside risk is a drop to 2150. That is about a 25% risk from here. The upside potential to our conservative target of 5,700 is close to 100%. To the cycle top target of 11,000, it is nearly a 400% move. BitMine is betting their company on this. The developers are shipping the code tomorrow. The technicals are oversold. We are at a decision point. The market is giving you a chance to enter at the same levels as the institutions before the new tech goes live. I'm betting that the Fusaka upgrade is the spark that lights this dry powder. Let me know in the comments, are you buying this dip, or are you waiting for lower prices? Make sure to smash the like button if you appreciate the data-driven approach, and subscribe so you don't miss the update when we hit that breakout. For real-time updates on this chart as the upgrade goes live, join my free Telegram group. The link is in the description. Thanks for watching, never financial advice, and I'll see you in the next one.